Greetings, members one and all of the Salivation Nation. Gold and silver are taking a little bit of a hit today because of the fear index. Fear of a Fed rate hike drives gold down 1.5% and silver down 2%. Let's check this out. Yes, this comes to us from Kitco News. And as I've predicted from yesterday's video, anything can change in a moment's notice. When yesterday's video was talking about how, the dollar or the gold is rising despite a strong dollar, and that could change at any moment, considering where things are because of stresses in the European Central Bank. Well, forget all that today, because we have a different reason, and gold and silver are down. The threat of a rate hike this year is spooking gold and silver investors as the yellow metal sees its worst day in 2 weeks, according to some analysts. Initial selling pressure pushed gold prices through the critical psychological support at $1,300, which caused further technical selling in the marketplace. June gold futures last traded at $1294.40 an ounce, down nearly 1.5% on the day. And there you can see the chart here with these candlesticks. All right. Silver is suffering even more than gold, with prices dropping more than 2% on the day and trading below $15 an ounce, the metal's worst day in a month. May silver futures last traded at $14.89 an ounce. Wow. Philip Streibel, senior market strategist at RJO Futures, weighed in on precious metals following the release of the Federal Reserve's March monetary policy meeting minutes, published on Wednesday, which were less dovish than economists were expecting. Now, there you go. After the minutes showed that most members of the Fed do not see a rate hike this year, there was no explicit talk of cutting rates. Investors are starting to speculate that the U.S. economy chugging along, there will not be a rate cut this year, said Streibel. This is weighing heavily on gold. So that's interesting, how the psychology makes this movement. Because from what I've read, there's never been any talks about a rate cut, and there's not been talks of a rate hike. Streibel said the selling pressure appears to be overdone, as there's still a lot of uncertainty over the health of the U.S. and global economy. Before the Fed released its minutes, the International Monetary Fund downgraded its growth forecast for 2019. The IMF now sees the global economy expanding by 3.3% this year, down from its previous estimate of 3.5%. The U.S. economy is expected to grow 2.3%, down from the previous projection of 2.5%. And that's kind of consistent with some of what I talked about in the prior video about why gold is rising. And, people are uncertain, especially around the world. But it's fascinating that the global economy's rate of growth is still higher than the national rate of growth here that they forecast. Streibel added that although gold is seeing some technical damage, with prices falling below the 100-day moving average, is still not overly bearish on the yellow metal. I wouldn't be really bearish on gold until prices close below $1,284. If that happens, then you will see an unwind of long positions, he said. Interesting number to choose there. Despite the short-term selling pressure, Streibel said that the investors might want to take a longer-term view on gold. He added that he likes the idea of selling, let's see here, buying on August $1,320 call options to limit task. Andrew Haidt, creator of the weekly Haidt Commodity Report, agreed that investors need to look at gold and silver short-term momentum. Investors are spooked because there is still the possibility that the Fed can still raise rates this year. I think the possibility is very low, but it's there. I think you need to look at the bigger picture. Economic growth is going to be muted, and that will keep long-term pressure on the U.S. dollar and interest rates. Haidt said that he prefers silver over gold because it's so undervalued in the marketplace. The gold-silver ratio traded at 86.72 points. The gold-to-silver ratio is at its highest since 1992. At some point, something has to give. He said, "I'm scaled down buyer of silver at these levels." And on the surface, I would agree with him about silver as being undervalued. I think it is. However, I think the days of seeing silver at 50 to 1 or 40 to 1 or 30 to 1 are long gone. I think that because of the wide, vast array of uses for silver and the fact that there really is a lot of it out there, I don't think we'll ever get it down to those levels again. And silver and gold are really growing apart in their uses and the nature of the two metals. And I think that's something to consider when purchasing silver. I do think it's a good buy. I think anything under $20 is a great buy for silver. But nonetheless, I do think that the gold to silver ratio it does have room to tighten up, but not as much as some people think, for sure. The overall look for precious metals. Let's take a look here at the prices here as I scroll to the top of the screen as more accurate prices. Look at that. Silver has fallen below that floor. Yesterday, I don't think we're going to see silver go under $15 again this year. Look at it. There it is. It's below $15. Platinum is now below $900. And palladium took a pretty big hit too. $1370.58. Gold is at $1293.28. As of the recording of this video, down 15 bucks, 1.2% loss. Silver, almost 2% loss there. Wow. But I think this is an anomaly. I agree with the author here. I think that these prices are going to correct, and this was a psychological move, and with the precious metal prices, and I believe they will recover. And get back to kind of where they were before. I think we're going to see $1,300 gold again pretty soon and above $15 silver. Take advantage of these low prices if you can afford to do so. With all regards, I wish I could right now. I can't. Seems to be the case, but these are the times to buy when there's anomalies like these, when it dips down like this, I think it provides a good opportunity. But on the other hand, you never know. They could keep going down. And there's a lot of psychology. Again, as the author had said, he's saying at 1284, at 1284 is a new sort of the resistance for gold, $1,284 for gold. Then we'll see some of the unwind of the long positions. And I'm not as familiar with those markets with the futures and ETFs and the like. But there's psychology in there. And people are starting to get nervous when they see the price go down, so they sell. And there's a lot of that could come in and kind of exacerbate some of the other reasoning. And so we could have a low summer again with lows that we've not seen for quite some time before things pick up again. It's anyone's guess, really. But I think it's important, as I said yesterday, to pay attention to what's going on, because when you have things like this, when you have new resistance levels where the prices fall, there could be other things that happen in the news that could cause them to fall even further. And who knows? There could be other news events that come out or things in the economy, very encouraging economic indicators that could maybe have the Fed change their position or make a nod into another direction. If that happens, then we're going to see the baking in of lower prices, and then that rolls off of sentiment with buying with futures, and it just becomes a cycle, sort of a domino effect, and that could bring us to new lows. But I think as the new lows kick in, I think it would only be exacerbated even further on the other end of the spectrum, because when people start selling out of thinking about, oh man, this is the sentiment and it's just not there for gold and silver with these future prices, think about it the other way. I think it will be even worse on the up end, because the people that buy these ETFs with gold and silver, they understand gold and silver are hedges, at least to some degree. Even if they're in the paper markets, they know they're doing it as a hedge, as a protection. When times are low, they know they're not going to go to zero. For sure. When the prices start to spike back up a bit because of uncertainty in the markets, then people start to panic in the other direction. And especially if there's some really troubling economic indicators, doesn't have to be a black swan event. It wouldn't even take that for the prices to really climb up again. Again, I think this is an anomaly today. I believe we'll see them kind of recover unless what I said before happens. All options are on the table. They really are. It's fun to talk about, though, and it's fun to see where things go. And all we can do is just continue to press on as we have. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, comment, and subscribe.